Igor, how are you doing?
Very good, Jake. How are you?
I'm very well, and thank you for joining the podcast. So,
My
I want to
pleasure.
get straight into it. And why did you decide to start Firefish?
Well, actually, as always in life, there was a real life situation, I would say. So me and Martin, my co-founder, we've been friends for many years, and obviously we've been in Bitcoin for some time. And Martin, he did have a couple of like businesses, and once he had an investment opportunity to start a new business, wanted to invest in it, and he was kind of short cash, right? So he was like, okay, where am I gonna get the funding? And the natural sort of solution for that was selling part of his Bitcoin stack, right? So he started looking around and kind of trying to understand how to leverage the stack without selling it. And at that time, there was like 4 or 5 years ago, the only options out there were some of the centralized lenders that do not exist anymore, actually, that went bankrupt, after the FTX and all these other issues. So we started sort of brainstorming like, hey, there must be a better way of leveraging your Bitcoin as an asset rather than just selling it, outright and then losing on the upside and obviously paying or needing to pay the tax and all that. So it was a real sort of a life situation or a business sort of opportunity. And we started brainstorming, what would be the better way of helping people never selling their Bitcoin and leveraging it as an asset in a much more secure way than what we call the trust me bro model, where you give up on your Bitcoin, send it to someone else, and just hope and pray that they will return it to you after the maturity of your loan. So that's how it all started.
Gosh, cool. I'm an investor. So this is just the kind of stuff I like to hear about. Everything compares to the Bitcoin return rate. So the new
Absolutely.
hurdle rate, if you want to describe it as that, is no longer owning government bonds and earning a couple of percentage points. It's like, no, you can have Bitcoin in self-custody with, collaborative custody or using custodians or however you might decide to do it, but extremely secure with very low counterparty risk and fantastic capital growth. It's like, well, where else could you put your capital? And what's going to beat that? Fascinating that was how it came about. And so the timeline then, Igor, so you guys were mates. This was about 4 or 5 years ago, you said. And so
Yeah,
to
roughly.
take me from like, I love this. So there was that initial pain point. How did that snowball into like, okay, maybe we should start a business about this?
Yeah, I mean, I think the initial discussions were really like, okay, so what are the options out there, right? If you really believe in Bitcoin and its longer term value, and you really never want to sell it, what are the options out there, right? So we did a research. We looked at all the options out there. Obviously, as I mentioned, there have been these centralized lenders or the neobank or whatever they used to call themselves. And then obviously some DeFi protocols where you bridge your Bitcoin and wrap it and trust some sort of a federation and all that. So uh, both Martin and myself, we're actually coming from traditional finance, and finance in general is all about managing risks and minimizing the risks, right? So we've been really trying to kind of come up with an idea like, hey, well, Bitcoin is actually programmable, right? There are no smart contracts per se, as in the DeFi universe, but there are a lot of elements of the Bitcoin script and the network that potentially could be leveraged. We knew that multi-sig is a very good technology, for mitigating counterparty risks, but we really wanted to kind of make it even better, I would say, and even more seamless for the borrowers as well as for the investors. So we started kind of brainstorming about, all right, so how to put all these Bitcoin native natural components and features and tools together so that we can create something like a protocol or basically a non-custodial way of storing your Bitcoin and lending and borrowing against it, right? So obviously we did spend a lot of time, actually a couple of months, trying to figure out with some of our friends, cryptographers and coders, trying to understand what are the options that we have. And then after a couple of months, we actually came up with what we call now the Firefish protocol, which is a combination of multi-sigs, partially signed Bitcoin transactions, time locks. And that is actually a protocol that helps the borrowers to lock their Bitcoin directly on blockchain without the need of, to trust any third party entity in terms of managing the collateral, rehypothecation and all these issues around that, right? So once we understood that this potentially is the good way forward, the protocol actually is something that also resonated actually with the Bitcoin community that we've been talking to. we started developing the platform, and we actually went path of creating an open market, right, or open marketplace for Bitcoin-backed loans. So basically, Firefish at this point in time, we're just a platform that is matching both the borrowers and the lenders. So anyone can actually become a borrower. If you have a Bitcoin, you can lock it through the protocol, and anyone also can become a lender. So if you have free fiat liquidity or USDC liquidity, you can use it and leverage it on the platform as the investor. So you can earn actually interest, whereas your investment is actually protected by the collateral itself, right? So we started developing the marketplace. We've launched the platform 2 years ago, or 2.5 years ago, in an alpha release. Later, we went through beta release, and last year we opened it up for public. So that was a public release. We, love it or hate it, we had to obviously implement KYC procedures. I think, to be fairly honest, we do not like the concept of KYC in the first place, but at the same time, we believe that this will help us to also bring some institutional liquidity into the platform, right? Because, imagine you're speaking to a TradFi institution saying like, hey, do you want to fund Bitcoin-backed loans? And if you say, well, we're not doing KYC, we don't know who the counterparty is, there's a very limited chance that they would agree on such terms, right? So since last year, basically, we've been running the public release, and early this year, we've launched also support for the global markets, because obviously we're based in Prague, in Czech Republic, and the initial markets or the focus had been Europe. And since a couple of months ago, we've also launched stablecoins, and we're able to onboard users from all around the world, basically.
Cool. Gosh, so many questions. The thing that I guess I'm trying to figure out in my mind, and forgive me, I had the best of intentions to actually sign up with Firefish and have a play around with it, and I haven't done that before this call, which I really regret. I've been traveling back from Melbourne to where I live today, and I've got 3 young kids. It just hasn't been possible. But when you say the Firefish protocol, is this an open source protocol that other developers can build off of, or have you kept it closed source and therefore it's more of like a private business model in that sense? I'd love to unpack that a little more. What does that mean?
Absolutely. So, trust and don't trust verify. Sorry, don't trust verify.
Yes.
That's
crucial.
The thesis in Bitcoin, right? So, absolutely. So, obviously, with that in mind, we really wanted to make it as transparent and open, as possible. So the protocol itself, you can actually find it on our website, in our document hub, where you see how the protocol is constructed, what are the components, how the oracles that are part of the whole system work. So we really want to be as transparent as possible, to have it open for the whole market. In terms of the code itself, we've been just tweaking some of the features, adding some new features. So the code itself will become open source very soon. We're already working on it. So really, that's, our mantra is like, hey, check it out. We also want to sort of give a tool or create a tool for the borrowers to verify whether the code is actually generating the addresses the way it should be and all that. So definitely this is the part of our philosophy, to be open and transparent about everything that we do.
Really cool. And to give some context for people that are listening that might not know what you're referring to when you mention like centralized platforms previously, I'll let you answer this question in just a second, but I was a customer of Celsius, which was a company founded by a guy called Alex Mashinsky, who's recently been jailed for 12 years for criminal fraud. And what Celsius was doing was, like you referred to, trust me, bro. I actually had a previous podcast I started, and we had a guy on the show from Celsius who was a community manager. And in the show, I was with 2 friends, and they were a bit more into kind of crypto, and I was more of a Bitcoin maxi at the time. And we could dig the episode up. Our podcast was called We're So Bloody Early. Shout out to Matty and Jigs that did it with me. But I was asking him, like, what's the counterparty risk, essentially? He's like, oh, you just got to trust us with your digital assets. And you're like, okay, cool. Well, I'm out. But other people definitely weren't out. And I even actually had some stablecoin on Celsius when it went down. So I lost those funds. I managed to sell them for, 40% of what they were worth to someone in the secondary market somewhere. I had other friends who were involved in Celsius that had a lot more on the table that all disappeared, essentially. And basically there were businesses in the crypto space that were out there advertising yield on your digital assets, and you were able to take debt in stable coins against your crypto tokens, and they were catering to the entire crypto market. And they got caught out in the back end of 2022, where basically everyone had been borrowing off each other and the likes of FTX and 3 Hours Capital, and the whole lot just went. And what you saw was really what happens in a financial market when there's no lender of last resort. There was no central bank to bail them out. And in some ways, that's capitalism. And that's exactly how it should work. And so I'm not really against people trying that. It just proves that's not the way to do it. To your story in that sense, Igor, did you ever use any of those platforms? Or when you were building Firefish, did you see these other things like they were a couple years ahead of you, lots of traction, lots of marketing, lots of noise, but ultimately they failed because they were building on quicksand? So yeah, does any of that resonate? And I lost some money in Celsius, so screw you, Mashinsky. It wasn't as cool as you said.
Yeah, so sorry to hear that. I mean, yeah, we keep on hearing a lot of stories about Celsius in particular, BlockFi as well, right, and a couple of other platforms that were out there. And to be fairly honest, these platforms were exactly part of our inspiration, right? Because
it didn't
to your
work.
point, like if someone really says that you have to trust me that I'm gonna return your Bitcoin back, and also just if you do the simple math, when someone promises you like, hey, you're gonna get 4% yield on your Bitcoin, when you know that Bitcoin itself is not generating any yield, then obviously you should ask yourself the question like, okay, so where does the yield come from? And that's actually my favorite Bitcoin meme. So this was definitely the inspiration for us, and that's why we wanted to create a platform where you do not have to trust platform, right? I mean, even and part of the protocol, I would say, is built in a way that even if Firefish disappears, if our platform disappears, we're not gonna actually escape with your or live with your Bitcoin. Nothing's going to happen to that, right? So we really, from the very, very, very first moment of building Firefish, we've been contemplating like how to build it in a really trust minimized way. To be fairly honest, there are certain components where you have to trust Firefish, for example, in terms of liquidations, things like that. If you opt for Firefish liquidation as the liquidator. But in general, we really were trying to minimize all these risks, and definitely we don't want to go the trust me, bro path. So that's really in the DNA of our platform, I would say.
I'm making an assumption here in that I've not tested the product myself, but from what you've explained already, the reason it's not trust me, bro, is because of the native design benefits of Bitcoin and the ability to use multi-sig. And so you can have a Bitcoin wallet that has a key with a lender, a key with a borrower, and a key with a third party. And if the contract that is agreed at the start is not kept to, then the Bitcoin is sat there to help deal with the blow up, whatever that might prove to be. So the thing I'm really interested in there is like the counterparty risk is clearly far better when you're dealing with a tool like that. You're not just trusting someone with your Bitcoin. You're not sending it to a custodian. Like the 4% yield you might get on your Bitcoin is still like, why would you give someone your Bitcoin get 4% when Bitcoin's already doing 30, 40, 50%
Exactly.
CAGR? It's like pennies in front of a steamroller, mate. You're taking too much risk by doing that. What have been some of the challenges of building on top of Bitcoin? Because one of my key thesis as an investor in Bitcoin long term is it's so flexible to build on because it just doesn't die. You've got like the strongest foundation for building economic products on ever. Is that proving to be true, Igor, in your experience, or have there been some difficulties with it?
Listen, I mean, in terms of the logic of the protocol itself, initially many people were sort of skeptical. They were like, hey, Bitcoin is not DeFi, Bitcoin is not Ethereum, you can't program anything on Bitcoin, and there are some just very simple scripts, okay, multi-sigs, and that's about it. But if you really dig undercover, you really find out that you can actually combine a lot of these elements of Bitcoin and really make it, or you can create something, what we did with the Firefish protocol, where you really take the native components of the protocol and then kind of combine them in a way that you feel are valid or are basically getting to the goal that you're trying to get to. So for us, the initial skepticism was out there, and it was really kind of tricky to come up to what we've created, because we have created something that is not very common in the marketplace. So normal or standard sort of threshold schemes, like the multi-sig schemes, like 3 out of 4, signatures and stuff like that. We've created something slightly different. Our protocol is based on 3 out of 3 signatures, where a borrower holds one key, which he uses at the very beginning of the process. And then 2 additional keys are held by what we call oracles. So we have a price oracle and a payment oracle, right? So the lender actually doesn't have to hold a key, which is sort of counterintuitive, because it's not a standard setup that you would normally see in the market. At the same time, it also enables us to bring into the platform non-Bitcoin native people, right? So we do have a lot of lenders who are, living in their fiat world. They have some spare cash, and they're able to invest into Bitcoin-backed loans and earn very interesting interest or yield, basically, that is definitely higher than the standard interest rates that would get on a term account, let's say in a bank, right? So we also wanted to build the protocol in a way that would also enable, as I mentioned, the TradFi institutions to hop on this market, because we believe the interest rates in the current market, basically as it is, are rather high. And it's really definitely because of, first, I would say, the perception risk by the TradFi institutions, who are sitting on tons of cash, but also due to the fact that basically none of them are crypto or Bitcoin native, right? So for them, it's hard to sort of comprehend the codes. They do not have the crypto infrastructure, the wallets and stuff like that. So our platform actually is built in such a way that, you do not have to be Bitcoin native whatsoever. Even in case of default, you can actually opt for what we call Firefish liquidation, where Firefish would liquidate the collateral if the counterparty doesn't repay the loan. So literally, our only role as the investor is to basically send the funds to your counterparty and then receive the funds back, right? So as I mentioned at the very beginning, there have been some skepticism also in terms of so Firefish holds 2 keys. The very important point to mention is that even though we do hold the keys, and those keys are actually just to decide whether Bitcoin goes back to the borrower or to the liquidator, right? The liquidator could be investor themselves, or it could be Firefish. So literally, we are only able to say that Bitcoin goes left or it goes right, depending on the payment information or depending on the price information we get. So, for example, if Bitcoin price collapses like 50%, because our standard LTV is 50%. So if Bitcoin collapses to what we say LTV 95, then Bitcoin will get liquidated. So even though we do hold the key to kind of decide whether Bitcoin goes left or right, we can't change those addresses. Those are hard coded. It's always going to be the borrower's address, and it's always going to be the liquidator's address. So that's how the logic of the protocol basically works.
Really cool, Igor. So, and again, I often have more questions to like the one answer. It's like just your mind goes to so many places. I'd love to spend a bit of time getting a bit more flavor for the type of use cases that people have come to you with that are like physical ones. So you mentioned that your co-founder was sitting on a Bitcoin stack. So he's got lots of equity, but actually he wants to take a little more risk in something else, like a startup business. It's like, how do I get my Bitcoin equity and not sell Bitcoin, but also take this additional risk? What are other use cases that people are coming to you? You've already mentioned institutional lenders. So this is people sitting on stacks of fiat that want to earn better interest rates. That to me makes a lot of sense. And the idea of making that easier for them to participate, absolutely epic. I think of immediately, like if I turned up with a piece of real estate, you've got this massive market of financial instruments on top of real estate that help people take mortgages, take short-term loans, like you name it, right? It's all possible. But that's because it's an extremely developed marketplace, and Bitcoin just isn't there yet. So helping bridge the gap between the stacks of fiat that are out there and Bitcoin itself is really fascinating to me. But I'd like to just spend a bit more time on the other side of that. So people who've figured out Bitcoin's a good idea, bought as much as they can, would like some liquidity on it, but actually know that you're selling the fastest horse in the race. So you'll never get it back if you do sell it. Now, that's not to say that selling's wrong. Sometimes just do it. You might value something else more than Bitcoin. That's totally fine. But what are people trying to do? Buy houses or pay for their rent? Or what are some of the structures people are thinking through?
I would say it's all over the place, really. Like whenever we speak to our users, obviously we do not proactively ask them like, so hey, how are you using your loans? But whenever we go to a conference
Unlike a
or
traditional
speak to
bank, yeah, it'd be like, where's your money
exactly,
going? Where's it come from? Tell me
exactly.
everything about you. Yeah.
Exactly. And this is actually the beauty of Bitcoin. I would say that you could call it democratization of collateralization of your asset, right? Because
Nice.
not
Yeah.
everybody can afford a house, but everybody can afford a Bitcoin, or obviously part of the Bitcoin. So anyone can have finally an access to an asset that appreciates in time in the long term, an asset that is super liquid, an asset that no one can steal from you. And on top of that, you can actually start using it as all the wealthy people do with their real estate, with their assets, with their stocks, bonds, all these other things. So I think this is the component that I really love the most about Bitcoin and the use cases around it. So in terms of the actual use cases, I would say there is a significant portion of the users that are trying to use this or trying to leverage the leverage strategy, right? So meaning, if I have one Bitcoin, how can I get more out of it, right? So you actually lock your Bitcoin, you get a loan, and you can actually buy more for that, which is a common strategy in traditional finance. When you're holding stack of bonds or equities, you can always leverage yourself even more. This is definitely a strategy that I wouldn't recommend myself. It is a speculation. But then there's the second part of the use cases, which, as I mentioned, go all over the place. Like one of our users was like, hey, I'm buying a car and I need to pay a tax because I'm importing it from abroad. And I don't want to, again, I'm sort of short cash and I don't want to sell my stack, right? So he actually took a short-term loan because he obviously calculated his cash flows. He had a fiat job, and he used the loan to pay for the car, for the tax, basically the value add tax. Other use cases, I mean, you mentioned real estate. Like there has been a number of people that were telling us like that we actually help them to, let's say, finish their houses, to add a new kind of, or rebuild their real estate. Because I've been actually pretty surprised how often people have issues with their credit scores in banks, right? So there was this one couple that came to us saying like, "Hey, we almost finalized our house. There's still a lot of things we need to finish though, and the bank doesn't want to fund us anymore, right? Because we've got like a mortgage, we've got some other loans from them, and they're like, yeah, you're on the limit. Sorry." We're not gonna give you any more loans. So for them, the option was as well like either selling their Bitcoin stack or actually borrowing against it. And literally, they came to us. They were like, "Thank you so much. You really changed our lives. Finally, we have our house built as we wanted to, and all that."
Cool.
So there are really a lot of use cases. As I mentioned, Martin's example of investing in a company. There has been a lot of users actually coming to us saying like, I'm investing into startups. I'm a Bitcoiner. I don't want to sell it. There's a great investment opportunity. I want to use my stack against the investment into this startup. And then last but not least, the miners, right? So miners are natural borrowers because their revenues are in Bitcoin, yet they have to pay for the electricity, for hardware, operational costs and all that. So for them, and as we know, miners are the biggest sellers of Bitcoin, and they're always kind of crying. I'm sure there's always a teardrop on every single Bitcoin they have to sell. So for them, this is also a great strategy. Whatever you mine, just rather collateralize it, hold on to your stack, and then fund your operations with the borrowed money. So, and ultimately, as we know, thanks to the debasement, inflation, and all that, you want to be short an asset that is declining in value, and you want to be long the asset that is appreciating in the long term. So, as I mentioned, many use cases, and it's really very interesting to see how people are actually even thinking about the collateralization, because as I mentioned, it is a predominantly a strategy for the wealthy or for institutions, like having an asset, collateralizing it, funding, and all that. So we are actually in the process of, I would say, even educating the market, educating Bitcoin market about like, hey, you are holding an asset. You can use it, pay with it, do whatever you want, but you can also use it as an asset and collateralize it, and build whatever strategies you want around it. And lastly, I would say there are also many people that are using, let's say, short-term loans for cash flow management, right? So they want to be as short fiat as possible. So they're funding themselves actually through Bitcoin, really paying bills, whatever you have to, but still keeping onto your stack. So there is in Bitcoin community, obviously there are a lot of people who really want to be as short fiat as possible, even though we still live in a fiat universe. We can't avoid it, but this is a good strategy for people with this kind of mindset.
Cool. It's very, very interesting and as you say, the fiat system that we were born into, it's not going to disappear. So it's kind of like a payments network that is over time going to be in some ways disrupted by Bitcoin. But like, is the government going to start accepting Bitcoin to take its dollar in tax? Like, yes, in some places I've seen reports of this potentially happening, but it's not going to happen overnight. So to transact in your local geography, you're more than likely going to have to use the local currency. And that might be some digitized version of it, whether it be a stable coin, for example. But it's very, very interesting to think through. And so, Igor, I'd love to understand some more around the actual numbers of how this functions. So it's a marketplace, which I love. So it's like, okay, it's about as a business in the middle of this, and we'll get into this in a second as well. It's about attracting both sides of the marketplace. And to do that, you have to have attractive rates. So what kind of interest rate might an institutional lender get on the Firefish marketplace? And equally, if I was to turn up with my Bitcoin, what might I have to pay to get a loan on my Bitcoin?
So this is also, I would say, one of the rather counterintuitive elements of the platform when it comes to setting up the interest rates. Centralized lenders, they would, obviously quote a rate like, hey, that's 15%, take it or leave it. Do you wanna take a loan or not? It's your call. Some other platforms would be driven by the lenders. So the lenders would be offering, various rates for various tenors, for example, various currencies. Whereas on our platform, we flipped it the other way around. We wanted the borrowers to set the interest rates they're willing to accept, right? So if you're the borrower,
Wow.
You come to the platform and say, hey, I want to borrow, let's say, 10,000 euros for 12 months or 6 months at 8% or at 10%, right? So the borrowers are actually submitting their requests into the platforms, and then investors, what we call so basically lenders, what we call investors, can see the full marketplace, the full order book, basically, of the requests from the borrowers, and they
cool.
can decide on the combination of the amount, of the tenor, and the interest rate they would accept, right? So it is driven by the borrowers. Obviously, when there's a bigger demand than supply of, let's say, fiat, then the borrowers would need to kind of increase their interest rates as they go. But as it's an open marketplace, there's always the price always settles. Like the interest rate always settles where there's enough liquidity, enough supply of liquidity to cap those rates. Also, the second option for the borrowers is something what we call an instant loan. So we do have a couple of lenders that already committed their liquidity for the platform. So you as a borrower, you do not have to wait until some investor picks your request and then you have the deal ready.
Nice.
You can go to the platform and just click like, hey, yeah, I'm taking an instant loan. The liquidity is already committed. So once you process your Bitcoin, once you lock your Bitcoin, the funds are dispersed immediately, right? So the interest rate, when we talk about interest rate, so the instant loans obviously would be always a bit more expensive than the rest of the marketplace. So that's the kind of the premium that you pay for the convenience that you get the money on your account immediately. And at this point in time, the interest rates for USDC, for example, which might be relevant for you, for the instant loan is actually 11.5%. But if you want to go to the marketplace, the rates are lower. So you could get from, depending on the tenor. So for example, 3 months loan, the interest rates are much lower than for 18 months. the maximum that we support for the time being. So for USDC, the range would be from like 6 to 10%, let's say. For euros, we've seen a tremendous demand. So the interest rate would be again something around 9 to 12, 13%. And these are obviously also very interesting rates for the lenders. Like, getting a double digit on euros is basically impossible unless you kind of gamble or, buy some stocks or junk bonds or something like that. So that's cool. Where those rates are, and that's the process how they're set. Yeah.
And what I'm always looking for is environments in which you can see a 10x on the status quo, be that faster, cheaper, or stronger. And so, a traditional bank account, I know here in Australia, I might get 5% on my Aussie dollars in one of the big four banks. In the UK, it's not even that. It's lower, I think, on your pounds, maybe like 3 or 4% at best. And it's like, well, you can get double, triple those numbers if you go and stick your fiat dollars in USDC via Firefish. How does this work as a business? So for you guys in the middle of all of this, I absolutely applaud the incentive or the instinct and intention to make your business as transparent as possible. But also you need to be incentivized to actually go and build this thing. So how does it make money?
So, well, first and foremost, as we are still a startup, even though we've been running the company for like 3 years, so we do have investors, a couple of venture firms behind us, as well as recently we announced a partnership with Brains, basically first mining pool in the world, a Bitcoin mining pool. So we've been using obviously funds we've received through the funding rounds to obviously build a platform, to execute the go-to-market strategies and all that. But in terms of the platform itself, we do charge a fee, a processing fee basically for each loan, which is 150 basis points basically per deal, right? So obviously depending on the range or tenor that you actually go for, if you go for 12 months loan, then you're going to pay 150 basis point on top of the interest rate that you've basically are going to pay to the investor, right? So that's the primary source of income. We are, as we speak, we're developing additional new products. They're still in the pipeline. We're gonna definitely update the whole market as soon as they're ready. But we might find also additional sources of income. But for the time being, the majority of the costs, I would say, are covered by the origination fee that we charge.
Okay, cool. And that to me means that basically the bigger the volume you guys can do as a platform, the better for this initial use case and business model. Yes, there'll probably be all sorts of other different things like securities lending, as you've described. It's a massive business, like people taking loans against their Apple stock. Like, how do you think old mate Muskie had the cash to go and buy Twitter? Well,
exactly.
He's got a shitload of Tesla stock, and he's like, well, I'm going to take some cash from that stack, and I'm going to take some cash from somewhere else. And he's like, yeah, I can probably lock that in at like, he's probably only paying not even 10% interest, I'm sure, on that stuff, right? And it's like, it's not a free hit, but for someone that backs themselves, the ability to leverage your existing wealth is really, really fascinating. And that's what you're helping to unlock here. This is definitely private business information, what I'm about to ask. So there's absolutely no need to reveal it on this podcast. But having done some early stage investing in the past, I'm always interested in how the funding rounds went, what valuation you did it at, how much you managed to raise. Is the business registered in the Czech Republic, for example? Like, how did you actually go through that? Because a lot of people that have great ideas, but actually building a business is quite a lot of boring stuff. It's like you've got to found the company, you've got to have a team, you've got to build a product, you've got to finance that team somehow. So as many details as you're willing to share about that actual process, I'd love to learn.
Yeah, I mean, so yes, we are, as you mentioned, we're basically located in Prague, in Czech Republic, even though the operating entity, so the platform itself, the platform operator is based in Slovakia for various reasons. I mean, still, it's European Union for people who are not, very good at geography. So based in European Union, the holding entity is in Czech Republic. So that's the one that is actually building the software, building the application, developing all these things. When we started the company, we've been very lucky. We were very lucky actually bumping into one of the local VCs. They're like, very prominent venture firm here in Central Europe. They actually do invest mostly in retail platforms, e-commerce and so forth. But they do also have a crypto arm. So they had a couple of crypto businesses, and they really got very interested in our proposition. So we literally, at that point in time, when we got the first funding, we only had the white paper, like, hey, that's the idea. But they were immediately bought in, right? So they are really kind of forward thinking, and the concept of collateralization and really leveraging Bitcoin, or bringing this as a new and safe use case to the Bitcoin market, really resonated with them. So we've done already 2 rounds of funding. The last one that was publicly announced a couple of weeks ago was with Brains, where we raised 1.8 million in the full round. So these guys are, at this point in time, our investors. To be fairly honest, we after the very first round, when we went going through the second round, it was still what people used to call the crypto winter, right? So that was 2022, 2023, and we did approach a lot of venture firms, and at that point in time, we were just building the platform, or even at that point in time, we were already in the beta phase. But it was really very difficult to get more funding, because I think people were still sort of impacted by what happened in 2021, 2022, the FTX,
absolutely,
the Celsius, and then obviously also the NFT era and all the other crypto things. So it was, at that point in time, it was very difficult to get the funding, but it was a good time to actually build things, right? So Bitcoin at that time, I think, was around 25K, kind of flat after the collapse. So we were building the platform, and to be fairly honest, right now the interest is out there, even without us proactively going into the market and kind of trying to push for additional funding. There are venture firms coming already to us, because now, and I would say it is predominantly thanks to the ETFs and the overall shift in the mindset of the traditional markets towards Bitcoin. It's not a terrorist financing tool anymore. It is something legit. There are really, you can hold it on your in your pension scheme, like through the ETF and all that. So suddenly people realize, okay, maybe there are really interesting things that we could fund in the Bitcoin space, right? The crypto world, I'm not going to comment on that too much. I'm not following in that much, but obviously people burned a lot of money on projects that really didn't have any real life use case. Whereas collateralization of Bitcoin, helping people to leverage their asset as the wealthy do with their assets, is something that really resonates. So right now, I would say, touch wood, we've seen a lot of interest in additional funding. So I think, thanks to the product and also thanks to the traction, we already have more than 10,000 users on the platform. We processed more than, I think, 1,400 Bitcoin as the collateral. So the numbers are growing, even though we started here in Europe. But the interest is really out there, and the use case that we really delivered into the market definitely resonates with investors and potential partners. So that's where we're at.
Cool. No, awesome story, Igor. So I love hearing about entrepreneurship just as a general theme. You and your business partner would have spent countless hours thinking about this. How do we build it? How do we actually get to this point? And you're getting to a nice stage now where actually the inbound interest from early stage investors is like, okay, that's a good sign, right? You've maybe made it through that chasm that they speak about. The thing then, let's talk about this for a moment. So traction. And from my startup times as well, like traction trumps everything. Your pitch deck can be whatever, your product can be, it doesn't matter. None of it matters unless you get traction. And so can you think back over the last couple of years, was there a particular moment where you're like, oh my God, this is like working. This is actually working. Talk me through that moment.
Funnily enough, this has been really since the very first moment as we launched the platform, because once we launched it in the alpha release, actually, right? So it was very simple. It was just like a market, not even a marketplace, but rather like a board where you just submit your request, and we were manually processing it and all that. So there was not too much functionality. When we saw the people that were registering on our platform, we were like, hey, there are some, kind of well-known names from the Bitcoin world that actually registered on the platform. They wanted to try it. So I think already at that point in time, it was like, okay, so maybe what we're building actually really resonates with these people and makes sense for the Bitcoiners. So really from the very, very first moment, and there were people, I would say, were very, very brave, coming to us with big tickets from the very, very first moment. Like, hey, I trust what you guys are building because you're fully transparent. You got a good VC backing as well. So, we kind of ticked a couple of those boxes. We're Bitcoin only, Bitcoin native, no hocus pocus with wrapping, bridging, DeFi and various schemes, no token or no stable coin, Firefish coin or whatever. So I think really being transparent, being the Bitcoin native project was really something that people appreciated at the very first point in time. And then obviously, many of the VCs actually coming back to them, they were asking us like, okay, so why haven't you started focusing more on the institutional borrowers with the big tickets and this and that? But for us, I guess the two things, as you mentioned, the traction is the key. So we really wanted to prove to the market that the protocol we've built, the logic that we've built behind it really makes sense. It is transparent. It is safe. So the more Bitcoin goes through the escrow system, the better for us. And that's your traction. That's the traction you wanna see. And then once we actually saw that there is enough demand, we started working with some kind of additional partners in terms of promoting the service in different countries, key opinion leaders and all that. And suddenly really the numbers started spiking up. So having the protocol battle tested was very important for us, and we really wanted to have it tested by as many Bitcoiners as possible. And secondly, as I mentioned, I really think that this is a very unique proposition for anyone, for retail Bitcoiners who really have only a fraction of the Bitcoin, but still want to use it as a real asset, right? So if we were focusing only on the big tickets and the institutions, like, yes, fair enough, we would have, the numbers would be maybe somewhere else. And I'm not saying that we're not going to do that. Our initial steps and our initial focus was, let's build a platform for every Bitcoiner that is Bitcoin native, that is secure, and let's bring the proposition of collateralization to really every single Bitcoiner out there, right? So that was why we kind of decided on building a marketplace initially for retail, but as I mentioned, we're also going to be working with some institutional liquidity as well as institutional borrowers.
The truth is, like, the journey will take it where it takes you. Like, you might have started with retail, but actually if you see more traction in a different direction, then that's it. Go for it. That's the beauty of the free market, and actually being, as entrepreneurs, like being up and running with something in the marketplace, getting feedback all the time. Like, that's the key to actually building something of value. And so something I'd like to just walk through now that often puts me off when it comes to putting up my Bitcoin as collateral. The first major thing for me is counterparty risk. And I think you've already described very, very well how you've significantly reduced the existing or the status quo counterparty risk that existed before. It's like, this is much, much better as a product than a Celsius or a BlockFi, etc. And that's cool. The next part of it then is the liquidation risk. So with a short-term volatility like Bitcoin, it's all over the shop. And one of the things that I think concerns me with taking debt on your Bitcoin is the idea of getting margin called and just not concentrating properly. And you get an email, it's absolutely correct, you signed up to it all, but before you know it, a quarter of your position's gone. And you're like, oh, well, that wasn't quite what I was planning. So is there any way to help a user in that sense to not get margin called? And is there a way to give people as much forewarning as possible?
Yeah, listen, in terms of liquidation, obviously, I would say this is the biggest risk as always, right? We know that Bitcoin can be pretty volatile at times, even though I believe that after what's been happening in the last couple of months and years, the volatility is continuously decreasing. And I believe and I hope that we won't see like one day 50% spikes as we did in the past. At the same time, definitely, we always advise the borrowers first and foremost never to lock all their stack that they have available, right? So if I have one Bitcoin, I wouldn't ever just lock it as it is and get the full or get the loan against my full stack, right? So we always advise to have additional Bitcoin available exactly for the times of higher volatility, right? So the borrowers have the option to top up their collateral at any point in time. As I mentioned, the LTV is 50%. So it's kind of Bitcoin would need to move around 50% to the downside to get liquidated. But to be prepared for that, it's a very good practice, first and foremost, to lock more collateral, so to decrease your loan to value to even lower levels. Like I would actually say, like looking at the stats, the average loan to value is around 40. So people do not even stick to 50, but they always kind of add more collateral. So they are actually decreasing the liquidation price that is obviously available for them from the very first moment. So once you lock your Bitcoin, you see the level of LTV 95%. So that's our liquidation level. Where you would get liquidated at any point in time. As I mentioned, you have the opportunity to top up the collateral. Secondly, to your point, yes, obviously there's a number of margin calls, but as we know, the worst market shift happen overnight when everybody's sleeping. So you don't want to get into such situations. So I would say really the good practice is to kind of make sure that your LTV is low enough, that you top up your collateral if you feel like, you're going for holidays or, there's been some market movements and all that. And last but not least, one thing that we want to, because we also have to consider that we need to protect the investors, right? So the lenders. So there has to be a liquidation level. There has to be a process that automatically liquidates your collateral in case of massive market shift and the value not being enough to cover for the investment from the lender. At the same time, we are actually building something that I would call a liquidation protection tool, meaning you could actually opt in for a scheme or for a, let's say, product or service that would help you to protect your collateral from ever being liquidated, right? So there are different ways of doing it. There's obviously additional potential risks, like counterparty risks and all that might be involved. But for many people, this would be a good option. Like, hey, I'm going for holidays, I want to protect my collateral for at least two weeks, right? So you would get a window, like for a 2 weeks window, where your collateral wouldn't get liquidated and you would have a chance to top up the collateral. So that's something we're building. We already have the white paper or the kind of details of the service on a paper, actually, I would say. Obviously, the priorities have been somewhere else, in terms of getting the traction and kind of launching new currencies and all that. But this is definitely something that I feel that a lot of borrowers would really appreciate, as well as investors, because I would say sometimes the initial or the very first question from any investor, any lender is like, okay, so what happens if the counterparty doesn't repay? Or what happens if Bitcoin falls 70%, right? That's naturally your first question. So I think this kind of approach would bring a lot of benefits to both parties.
Yeah, that's really cool. And immediately it's another product line. So potentially additional revenues for you guys, which is awesome.
Absolutely.
I think if I sat here now and thought this through, I would have Bitcoin available for something like this. And I'd think of it as a portfolio allocation of like, okay, this percentage of my portfolio I'm going to put up and take some leverage against. And I'm going to have a reserve amount of Bitcoin over here in case the market's very volatile to the downside. Obviously, the benefit of Bitcoin is it might be volatile to the upside. So you might actually be able to change those allocations, which is cool. Igor, I have a number of different directions I want to go in. Let's go here quickly first, which is just in terms of geography. Is your product available all over the world? Or is it set to specific places?
Basically, in principle, it is available all over the world. For fiat loans, we support at this point in time European Union, so you can actually take a loan in euros, Swiss francs, or Czech koruna, naturally. So for fiat transaction, you would need to have a European ID, but for the rest of the world, apart from some usual suspects, you can register and use stablecoins, USDC in particular, for your loans.
And that in itself is so cool, isn't it? If you think about how difficult it is to get finance normally, i.e., you're trying to get finance on a car, you're trying to get finance for a house, the amount of paperwork that has to be done, the amount of KYC that they have to do, and it's not necessarily mandated friction that they like to put in place to make using Bitcoin difficult. I often think that's why KYC is there, in a sense, is to just make it harder for them, because it's just this capital sucked out of the existing system, and they're trying to slow it down as best as they can. But they want to see your employment contract, they want to see your bank reserves, they want to see your net wealth, they want a statement from your accountant, they want your wife's employment contract, the list goes on, right? But when you have Bitcoin, it's like, oh, well, I'm just going to put up the best money that exists. We're going to stick it in this account that everyone has a key for, or some derivative of that, as you've described. You've got the Oracle system, which is really cool. and therefore you can be anywhere in the world. And that is just, I mean, talk about a marketplace. It's massive, Igor. So I wish you the very best of luck building this. We've got about 5 minutes left, and I haven't been able to get to this, which I've been meaning to. But just in terms of yourself, how did you come across Bitcoin? What were you doing before? And just give me a whistle-stop lens on the world that you had that helped you see value in it.
Yeah. I mean, so I actually, as I mentioned, Martin and myself, we spent most of our careers in finance, right? So I used to work for Thomson Reuters, actually like a big global corporation providing market data feeds for financial institutions and all that. Later, London Stock Exchange Group. So that actually used to be my first and last job in a corporation. So I started at a university, and even before I started actually working for them, I used to be a trader, right? So I actually started trading during the dot-com bubble, which was, I'm not sure if it was the best time to start trading because obviously the markets just started tanking, which was really, really, really tricky. But yeah, I've been in trading since then. And I got into Bitcoin actually primarily as when it was sort of launched as a tradable asset, right? So I was really interested in Bitcoin as an asset that, you can trade 24/7, is highly liquid. They're regulated at that time, exchanges. So I was really interested in it from that point of view. But then later, our company actually, or my previous employer, we started looking into leveraging the blockchain technologies, right? Which obviously nowadays, or there has been massive hype about how blockchain will replace all the databases and everything, which I wouldn't necessarily agree with in principle, but so we started looking into blockchain. And it was interesting enough that one of our colleagues came and did a presentation on blockchain, and he said, like, just go and buy some Bitcoin and you see how it changes your life. I was like, all right, let me do it. Like for once, let me listen to someone, even though the idea might sound ridiculous, but like whatever, let's do it, right? So I was like, open an account on an exchange. So bought my first Bitcoin, did some trading obviously around it and all that. And later I spent my Bitcoin on things. And then when I saw the traction of the price and all that, I was like, damn, like this really looks like an asset that kind of has a potential in terms of the appreciation and the value. But to be fairly honest, it's been only a couple of years since I really went deep into the rabbit hole in terms of like the whole philosophy behind Bitcoin. There's a whole cultural universe actually that suddenly opened up for me once I fell into the rabbit hole, as they say. So yeah, initially it was trading, then the blockchain, but now, as you can see, it's Bitcoin and nothing else, basically.
Awesome. I think it would be fair to say that you sound similar to myself and that you came for the gains, but staying for the revolution.
Oh,
yeah. And
as always,
it is wild. I also often found myself saying that like Bitcoin doesn't change, but you change. And you're right. There's just all these new subjects that come up. It's like, what is money? Okay. What is censorship?
Yeah.
Okay. What is capital? Okay. Hang on. What is... Yeah, anyway, what is life? And that we could go on for hours, Igor.
Absolutely.
I wish you the very best of luck building your business. And it's just really cool to see how the marketplace is developing. And there's no doubt in my mind that helping people access this kind of currently locked up illiquid equity. It's not illiquid because you can sell Bitcoin at any time, but the long-term bull case for Bitcoin remains very strong. So if you're going to sell it, you need to be absolutely sure you're selling it for something more valuable. But if you're not, then actually taking a debt position again, it might well be the best choice. So I look forward to seeing your guys' progress, and thank you for today, Igor.
Thanks a lot, Jake. Thanks for having me, and thanks for your kind words. Really appreciate it.
Where can people reach out and get in touch? So there's probably going to be people out there that have questions. What would be the best way to do that?
Oh, definitely. So the best place to go is our website, which is firefish.io. So just go there. You'll see links to all our social media. We're obviously on X. We've got a Discord channel, LinkedIn, obviously, if you prefer. But the best way forward is really just go to the website. You can also sign up for the newsletter if you want to keep on receive our updates. That's the best place to go.
Awesome. Well, I encourage people to reach out, and if anyone has any feedback, get in touch, because I'm always intrigued, like why you wanted to take debt, how did you actually take debt, what were you using it for, and for people like Igor, it helps them improve their products. So do reach out. All right, guys, thank you so much for your time.